Welcome to the deep dive. Today, we're taking a deep dive into the recent Q1 fiscal year 2026 earnings and strategic outlook from Medtronic. You know, one of the biggest names in healthcare technology.
Absolutely, a major player.
We've sifted through their latest press release, the earnings call, financial schedules. Quite a stack of information, actually.
Yeah, a lot to go through.
And we've pulled out the most important insights, some surprising facts, and really what it all means for you, whether you're tracking the health tech space or maybe just curious about innovation. Medtronic is talking about entering a new chapter. You hear that phrase a lot. Groundbreaking device launches, strategic shifts.
Right.
So what does this bold claim really mean for patient care, for the company itself? Okay, let's unpack this.
Exactly. And this isn't just about, parsing numbers. It's really about understanding the evolving pulse of medical innovation.
Right.
We'll try to connect the dots between Medtronic's financial performance and the very real-world impact their technologies are having and, plan to have on patients.
So let's kick things off with the top-level results. Medtronic's first quarter fiscal year 2026. That wrapped up July 25, 2025.
Yep.
They delivered another pretty consistent quarter, mid-single-digit revenue growth. Organic revenue was up, 4.8%?
Solid 4.8%. And reported revenue saw an 8.4% increase.
Okay.
But what's really telling here, I think, is that while the revenue guidance was met, right in line, their EPS, their earnings per share, actually came in ahead of expectations.
Oh, interesting.
Yeah, which allowed them to actually raise their full-year EPS guidance. That's not just consistency. It points to, very strong operational execution, efficiency.
That's a great signal. Good execution.
Definitely. They're clearly finding ways to translate that revenue into profit more effectively.
Okay. And Medtronic is really leaning into this idea, this phrase, a new chapter. They're talking about significant acceleration coming second half of the fiscal year.
Right.
What exactly defines this new chapter? What's driving this sense of urgency?
Well, this new chapter, it's not just a hopeful phrase, It signifies Medtronic's deliberate shift. They want a more agile, high-growth kind of enterprise.
Okay.
A big part of it is a partnership with Elliott Management. You might know them, an activist investor.
Right, I've heard of them.
Their involvement here, it sort of signals a decisive move by Medtronic, addressing calls for maybe greater operational efficiency, portfolio focus.
Sharpening things up.
Exactly.
Yeah.
Pushing to unlock shareholder value by prioritizing those high-growth, high-margin areas. It's also seen in key governance enhancements, like appointing 2 new independent board members. John Grodelers and Bill Jellison.
Yeah.
Both bring deep medtech expertise, fresh eyes.
So this isn't just a minor tweak then. It sounds more like a strategic reset, almost like re-engineering the company's focus.
I think that's fair.
And it seems they're structuring their board to reflect that too, creating 2 new committees.
Precisely. A growth committee that's for overseeing portfolio management, capital allocation, for accelerated growth.
Makes sense.
And an operating committee. That one's focused on driving efficiency gains, operations expenses.
Got it. Growth and efficiency.
Exactly. And if we connect this to the bigger picture, these structural changes, they're designed to enable higher organic investment back into the business.
Okay.
While still delivering improved margins and accelerating EPS growth. It's fundamentally about building more durable earnings power. How? By fueling innovation.
So investing more, but also being smarter about it.
Right. Medtronic increased its R&D spending by a high single-digit percentage this quarter. That clearly shows this commitment. They're setting themselves up to be, much more nimble.
And it sounds like there's a longer-term vision here, too. They're planning to share a comprehensive update, strategy post-diabetes separation, new long-term financial targets at an investor day.
Yeah, mid-calendar 2026. So they're putting a plan in place.
Okay. So with this bold new chapter narrative framing their future, let's unpack exactly where Medtronic is putting its strategic muscle. Where are we seeing that promised acceleration in the core businesses?
Right, let's get into the segments. We absolutely have to start with cardiovascular.
Okay.
This portfolio grew high single digits this quarter. 7% organically, 9.3% reported. Good numbers.
Solid.
But the absolute standout, the real jaw-dropper, is Cardiac Ablation Solutions, CAS.
CAS, okay.
It saw nearly 50% growth globally.
50%.
50%. And even more staggering, get this, it grew 72% in the U.S.
72.
And in the low 70s in Japan. That kind of acceleration is, it's rare.
That nearly 50% growth globally, 72% in the US, that's phenomenal. That truly jumps out. What exactly is fueling that explosion? What's making their pulse field ablation PFA system so compelling right now?
It's a game changer, really. This explosion in CAS is driven by demand for their PFA systems, specifically the Pulse Select anatomical catheter, the Sphere 9 focal catheter, and the Afro mapping system.
Okay.
Physicians are giving phenomenal feedback. Procedure time, ease of use. It's different, unlike traditional thermal ablation, burning or freezing. PFA uses precisely controlled electrical pulses, targets heart tissue, can be faster, potentially safer.
Ah, so it's a different mechanism.
Totally different. Less risk to surrounding vital structures. It's a disruptive innovation, and it's rapidly changing the standard of care for conditions like atrial fibrillation, AFib.
So it's not just an incremental improvement, it's a fundamental shift in how they approach these procedures.
Exactly.
And what does Medtronic project for this momentum? Can it continue?
Well, they expect CAS growth to accelerate even faster in Q2.
Faster. Wow.
Yeah. And they have a near-term line of sight, they say, to an incremental $1 billion in revenue just from CAS off their FY25 base.
An extra $1 billion.
It's an extra billion. So they're ramping up supply, hiring specialized mappers, and they're advancing their PFA pipeline. There's a next-gen catheter, the Afra SVAR 360.
Okay.
Many electrophysiologists, the heart rhythm doctors, they consider it the most anticipated single-shot catheter.
Single shot, meaning faster procedures.
Potentially, yeah.
Yeah.
More efficient. So the question becomes, how will this, market leader impact the entire market? It's an $11 billion market, growing over 25%.
Huge.
They're aiming to capture a significant slice of that pie.
Okay, that's a huge addressable market. Let's shift gears a bit. Another major potential driver, renal denervation, RDN, for hypertension, using their Simplicity system.
Big RDN.
The U.S. Centers for Medicare and Medicaid Services, CMS, is expected to finalize national coverage, an NCD, on or before October 8th, 2025. This sounds monumental.
It absolutely is. Huge. There was overwhelmingly positive public commentary on the proposed NCD.
That's saying.
And key medical societies like the ACC, the American College of Cardiology, they've updated their guidelines already, recognizing RDN, the procedure name, as a treatment option for hypertension.
So the medical community is supportive.
Very. And consider this. Nearly half of all U.S. adults have hypertension.
Half? Why?
And 1 in 4 are uncontrolled, even with all the drugs available.
That's incredible.
So for those patients, the ones who can't control blood pressure with meds or struggle taking them consistently, RDN offers a completely new pathway, non-pharmacological.
A device-based solution.
Exactly. This could be a truly massive market, potentially, maybe even bigger than CAS in the long run.
Bigger than PFA.
Potentially, yeah. The patient population is enormous. And Medtronic is rapidly preparing for launch. They're anticipating huge demand.
That's a staggering number of people who could potentially benefit. Okay, so beyond these two potential blockbusters, PFA and RDN, anything else standing out in cardiovascular?
Yeah, still strong performance elsewhere. Their Evolut FX TVR device, that's for heart valve replacement.
Right, TVR.
That's in structural heart, up 6% organically, still growing well. And strong adoption of premium products in cardiac rhythm management. CRM.
Okay.
Like the Aurora EV ICD. That's their newer defibrillator. It's all 83% growth.
83%.
Huge uptake.
Yeah.
And micro-leadless pacemakers, the tiny ones. Still growing 14% after being on the market over a decade.
Still double-digit growth. Impressive.
Right. So yeah, Medtronic's cardiovascular segment seems to be firing on all cylinders.
Definitely sounds like it. Okay, moving on then. Neuroscience.
Neuroscience. This segment grew 3% organically overall. But within that, you saw high single-digit growth in neurosurgery and neuromodulation.
Okay, so specific areas are strong.
Right. There's spinable ecosystem that's driving differentiated share gains in spine surgery.
The ecosystem approach.
Exactly. It isn't just, a collection of products. It's a comprehensive, integrated solution for spinal procedures. Instruments, navigation, robotics, implants, all working together.
So it creates stickiness?
Precisely. It creates a significant competitive moat. Hospitals upgrading to the full system. They gain efficiencies, workflow, standardization, maybe better patient outcomes. It makes it really difficult for them to just swap out one piece for a competitor's offering.
Locks them in a good way.
You could say that.
Okay. And in neuromodulation, you mentioned high single digits there, too.
Yeah, another compelling detail there. Their Inceptive system for pain stim. That's spinal cord stimulation for pain. And the BrainSense Adaptive DBS technology for Parkinson's. Both are winning share.
BrainSense. That sounds fascinating. You mentioned it's a closed-loop brain-computer interface. Can you break that down? What does that mean in, like, simpler terms?
Yeah, sure. Think of it like a smart thermostat, but for the brain.
Okay, I like that.
A closed-loop brain-computer interface means the brain sense system is constantly listening. It senses the patient's brain signals in real time.
Listening to brainwaves.
Essentially, yeah, specific signals related to their condition. Then it automatically adjusts the therapy delivered by the deep brain stimulation, the DBS.
So it adapts automatically.
Exactly. It's not just one fixed setting. It's an intelligent system, always optimizing for that individual patient, offering truly personalized therapy adjustments without needing manual changes all the time. It's groundbreaking stuff.
That is a fantastic analogy. A smart thermostat for the brain. Wow. Okay, shifting again. MedSurg and robotics. How did they do?
MedSurg grew 2% organically, steady.
Yeah.
In the surgical part of that, their market-leading ligature vessel sealing technology.
Yeah.
It continued to win share for the 12th consecutive quarter.
12 quarters in a row. Consistent.
Very consistent. But the Hugo robotic-assisted surgery system, the RAS system, that's the one really turning heads, especially internationally.
The Hugo robot.
I'll keep going.
It's now in over 30 countries. Tens of thousands of procedures done. And seeing double-digit growth in existing accounts, meaning hospitals are using it more and more.
Good adoption, though?
Yeah. And a U.S. launch is expected in the second half of fiscal 26. So, coming soon.
What's making Hugo stand out? I mean, it feels like robotics is getting crowded.
It is. But its modular design and the open console have been incredibly well received.
Modular, meaning?
Meaning, unlike some competitors where you need this huge monolithic system taking up the whole OR,
Right.
Hugo's components are separate, more flexible. Hospitals can integrate it more easily, physically, and financially.
Lower barrier to entry, maybe, potentially. And the open console design, that's a big ergonomic plus for surgeons. Better visibility, more comfort during long procedures. It positions Medtronic well to, disrupt the established robotic surgery market, especially as it finally comes to the U.S. later this fiscal year.
Interesting angle. Okay, and finally, let's touch on diabetes.
Diabetes. This business grew 8% organically.
8%. Strong.
Notably, 11% internationally. That's where their newer Simplera sensor is already available.
So the new tech is driving growth outside the U.S.
Seems like it. And they're entering a strong innovation cycle there. New sensors coming, like Simplera Sync and another one called Instinct, which is based on Abbott technology. They expect to launch those in the coming months.
More new products soon, then.
Yeah. They also got CE mark, that's European approval, for expanded indications for their 780G insulin pump system.
Expanded to what?
Type 2 diabetes patients, children as young as 2, and used during pregnancy. So broadening the potential user base significantly.
Wow, okay. That's big.
But the biggest news, of course, in diabetes.
The separation?
Exactly. The planned separation of their diabetes business, MiniMed. The preferred path is a two-step IPO and split, expected to be fully completed within about 15 months.
Okay. And the rationale?
Well, the move is expected to be immediately EPS accretive for Medtronic, the remaining company. Boosts earnings per share right away.
Right. Financial benefit.
But maybe more importantly, strategically, it allows the parent company, Medtronic, to focus more sharply, put more resources into those really high-growth, high-margin opportunities we talked about, like PFA and RDN.
Back to the new chapter idea. Focus.
It's all part of that new chapter focus, streamlining, amplifying their core strengths.
So it's really about making Medtronic a more focused, maybe more agile company, shedding assets that might distract from those high potential areas.
That seems to be the strategy.
Okay, so beyond these product highlights and portfolio moves, let's look at the financial engine. The levers Medtronic is pulling to fuel this transformation and growth. What about margins?
Right, margins. Gross margin saw a slight decrease year over year. But importantly, it remained stable compared to the prior quarter.
Okay, stable sequentially. Why this slight dip year over year?
It was expected, actually, partly due to that business mix we discussed, like the ramp-up of PFA systems.
Wow.
That involves selling lower-margin capital equipment, the consoles, initially, alongside the higher-margin recurring catheters.
So the upfront sale drags margin a bit.
Exactly. It's kind of a short-term trade-off for that long-term, high-margin recurring revenue stream from the catheters. The early manufacturing ramp of the Simplera sensor also played a role. Higher initial costs.
Makes sense.
But they expect these margins to improve. As the CAS business scales up, gets more efficient, and as the diabetes business separates, that should give them a more favorable overall product mix.
Okay, so margin pressure seems temporary and expected, investing upfront for future gains.
That's the idea.
And it's clear they're not holding back on innovation. You mentioned R&D investment was up 7.7%.
Yeah, 7.7%. Well ahead of revenue growth. Especially strong investment in cardiovascular and diabetes, the growth areas.
But they're also getting more efficient elsewhere.
They absolutely are. At the same time as boosting R&D, they drove significant leverage in SG&A expenses. Sales, general, and administrative costs.
Okay, how much leverage?
SG&A grew 170 basis points below revenue growth.
Okay, break that down. What does that mean practically?
It means their overhead costs, sales, admin, they grew significantly slower than their revenue did. So they're getting more, bang for their buck, squeezing out more profit from each dollar of sales, even while they're increasing those crucial R&D investments.
That's impressive, spending more on the future while tightening the belt on overhead.
Yeah, that's a powerful combination if they can sustain it.
That efficiency is definitely key to funding future growth. So what's the updated outlook then for the rest of fiscal year 2026?
Okay, guidance. For the full fiscal year 2026, Medtronic reiterated its organic revenue growth guidance, still expecting approximately 5%.
Okay, consistent on organic growth.
But due to recent favorable foreign exchange rates,
Currency helping them.
yeah, they now anticipate a revenue tailwind, an extra $550 million to $650 million just from FX.
Nice bonus.
And they also improved their tariff impact assumption. They now expect less of a hit from tariffs, around $185 million.
Okay, so FX is better, tariffs are less bad. What does this mean for earnings?
It means they raised their underlying FY26 EPS growth expectation. If you exclude the tariffs, they now expect 4.5% growth, up from 4%.
Okay, a bump in the underlying growth rate.
And the overall FY26 EPS guidance range, including everything, is now $5.60 to $5.66 per share, a clear signal of confidence.
Definitely sounds like it. Raising guidance is always good news.
It is. And Medtronic is already kind of looking ahead, pointing towards fiscal year 2027.
What are they saying about FY27?
They're expecting high single-digit EPS growth then.
High single digits, accelerating again.
That's the plan. Driven by, accelerating revenue growth, that improved business mix we talked about, more CAS, the diabetes separation benefit, and the financial boost from the diabetes separation itself.
So multiple factors converging.
Right. The exciting part is seeing how these multi-year strategies are, fundamentally reshaping Medtronic into what they hope is a more focused, higher growth entity.
Okay, so let's wrap this up. What does this all mean for you, the listener, the learner, the curious mind, looking to be well-informed about, the cutting edge of medical technology?
Yeah, I think we've seen a company that's not just, reporting numbers. They seem to be actively engineering their future.
Engineering the extraordinary, as they might say.
Maybe. But from the rapid, potentially really disruptive adoption of new ablation therapies like PFA to laying the groundwork for what could be a massive new market in hypertension with RDN, Medtronic is making some bold strategic moves that could genuinely redefine patient care in those areas.
It's a compelling story, isn't it? Innovation fueling growth, and then that growth providing the oxygen, the funding for even more investment into potentially life-changing technologies.
Exactly.
What really stands out to me is this deliberate, strategic shift towards durable, long-term value creation, underpinned by these genuinely new and frankly exciting technologies.
And consider this. With the separation of the diabetes business, these strategic board enhancements, a partnership with Elliott, Medtronic aims to act even more boldly, more decisively.
Right, less encumbered, maybe?
Perhaps. So how might these internal shifts empower them? Empower them to accelerate not just their revenue, but their overall impact on global health conditions, on patient lives in the years to come. It really is about pushing the boundaries of what's possible in healthcare.
A lot to watch there. Definitely a company in transition aiming for acceleration. Well, that's it for this deep dive. We hope you feel more informed and perhaps, a little more curious about the future of healthcare technology.
I hope it was useful.
Until next time, keep learning.